All right, let's go ahead and get the microphone check out of the way here. Let me know if you can hear me across the various streams. We've got quite a few going on here today. We've got YouTube, X.com, and Twitch. We also have a few private streams up for those that cannot access those websites. So go ahead and let me know if you can hear me across the various chats. I do suggest that if you are in one of the other chats, other than YouTube that is, that you head on over to Landy's Crypto Corner on YouTube and chat there, as it does aggregate the chat much easier. That is where the bulk of people typically chat anyway. So I'll be on to start in just a moment. And yeah, just let me know if you can hear me okay. All right, so it seems the microphone is working good. Let's go ahead and get the music under control and get started here. Bring that down. Pause it on my end here. And let's get rolling. Hello and welcome to Landy's Crypto Corner. Today is February 21st, 2024. And we are doing our Market Madness Technical Analysis Wednesday live stream here. A bit of a chill stream today. We're going to take a look at Bitcoin. We're going to take a look at Dixie, gold, and traditional markets. And if there is time near the end, I will open it up for some coin requests. Now, Bitcoin is currently trading below the upper first standard deviation of the Bollinger Bands, near the low wicks of this current high side consolidation, with the likelihood of things possibly coming down to the basis, very, very likely, if we do see Bitcoin trade and close the daily candle below 50,642 here. That would give us a general target somewhere around the current basis here at 48,000 to the wick highs at around 49,000. So this is the wick high of the deviation of the prior consolidation over here, prior to the move up, where we had a deviation high at around 49,100 and then a deviation low right into the monthly at 38.5. So that is going to be the first big downside target should we see Bitcoin lose the current range. Now, it's not a given that it's going to exactly hit those areas, but they are definitely going to be the areas of interest. Now, if Bitcoin does not drop the range before close today, that being at 50,642, we will see, either way, we're going to see the basis move up, and it's likely going to be somewhere around 48.5 to the wick high here at $49,000. Now, if we go back over to our support and resistance chart, we can also see that it is trading currently right around, at least the where price is currently trading in the weeklies up here, is raising that basis band up to this March of 2022 monthly swing high around 48,230. And we're likely to see the basis move above there somewhere around, the wick highs, 48.5 to $49,000. Now, if Bitcoin does lose the basis in between the daily close at any point, we do need to pay attention to this monthly swing high area at 48,240, 48,230, down to the monthly here at $47,000. So big zone there. Coming into the monthly support area, at least for a test. We did see this as prior resistance over here. So we saw, on a closing basis at around $47,000, this monthly was holding price down. Bitcoin moved through after getting this deviation. When Bitcoin did close in here right on that monthly and then open, it also spiked the 2022 bear market swing high there at 48,240. And, a retest of this area would be right in line with what Bitcoin has been doing already. Even coming down to that monthly area at 47,000, and even in the monthly zone down to the next monthly here at 45.5. Those are two big monthly closures to pay attention to in that zone. We're also likely going to see the lower first standard deviation start moving up into that area pretty aggressively, as we do see BBWP volatility is falling. This will further compress price back to the mean, being the basis band area. And as long as Bitcoin is closing candles above the lower first and somewhere in and around these monthlies here at 45.5 to 47K, looking very, very bullish still. That's well above the prior consolidation lows. And, in this case, this would be the first real high after the move off of this weekly zone at the lows at 41.8. At the wick low here, the higher lows coming in a little bit above there at 42,230 or so. So as long as Bitcoin is trading above this prior consolidation prior to the move up, and especially if it's above the deviation highs and the range, the tighter range highs over here in this 47 to 45.5 area, looking very, very bullish for continuation to the upside over time. And, we do want to see pullbacks. I mean, this is healthy. If it pulls back and starts to lose that lower first, which is currently coming in at 44,364, I would, by the way, expect this to be somewhere around 45 to 45.5 at the monthly here. It might not get there quite as aggressively. It might come in like, 45 or so, somewhere around this close open high here. And, that would be kind of right in line with BBWP dropping and then Bollinger Band compression, especially if Bitcoin closes below the upper first. Now, this is all contingent on Bitcoin still losing this weekly here at 50,800. And then, of course, the local wick lows at around that 50,642. I do want to call your attention to this little order block daily candle here that did spike down into the monthly 2022 bear market swing high there around that 48.3 area, just above the 48,240 swing high from March of 2022. So that is another area to pay attention to right around this order block candle, the high side and low side. And the high side is only a slight bit lower. It's 50,423. So I would keep a close eye on this area. If it does hold up, at least in the lower term timeframes, it might offer some good scalps back up to retest any kind of a breakdown if we did see a breakdown. Below there, of course, that's when we start looking at the basis, the March of 2022 monthly swing high at 48,240, those monthlies at 47 and 45.5 respectively. And if that did break down, lower first is right there. Still would be maintaining structure. Now, would I want to see price falling that far? And I not really. I really don't want to see price to remain bullish on the longer term timeframes. I don't want to see price back below around 45.5 maximum. But the higher side bounces are more likely, at least from its current position. And then we come back to it, evaluate, see if it could take out the local high here at $43,000. So we did, $53,000. We did get that spike high just above the September of 2021 weekly swing high there, which is coming in at just under 53 at 52,944. And I had mentioned, just generally look for $53,000, and it literally got hit perfectly. So we have seen that move. Actually, let's stick on this chart. If we did see Bitcoin get above $53,000 at this wick high, and especially close above the September of 2021 weekly swing high there, I would, in general, be looking to the upper second standard deviation somewhere around the mid $50,000 region, between $55,000 and $56,000. From there, over time, I would eventually be looking up to this monthly at 58.8, to the monthly just above at 61,350, maybe even more into the low $60,000 region. We should actually mark this out, seeing as we are on this chart. and make it a zone now that we have the potential for this to be a primary upside target, or at least the next primary upside target above 53,000. So we'll mark that out as being our larger zone. And then we're going to go ahead and we're going to clone this wick to get the wick highs here. So we've got the swing high from April of 2021. So this would be the monthly swing high. It's also a weekly swing high. So we'll just call it the monthly for right now. We can always adjust that later. And yep. So monthly swing high. I should capitalize that, but whatever. And this is, what is this? This is the April of 2021. So let's go ahead and change that to April. All right. I messed that up. So let's see. April, and then we've got the actual all-time high, and that was coming in November of 2021. So we can clone that and mark that area as well. And that is going to be the all-time high. All right. And we can even make that a zone as well, because that is going to be a bigger area of interest at the actual highs when it does get there. And it's not an if, it's a when. And in this case, you know, Bitcoin can very easily hang on to this weekly here. It can deviate this weekly zone as long as it's trading in here, you know, and closing candles in here. You know, I'm not looking for too much further down. Maybe wicks if it continues to close above 50,800. And then we could possibly look for wicks of interest over here in the $50,000 region, maybe even deviations down into 49,000 to test this wick high. But as long as it's closing in this weekly zone, upside is more likely. And we're probably looking at the daily, you know, continuing with its price volatility mean reversion. And that is primarily because the basis band is aggressively moving up towards price action, you know, as it stands right now around the March of 2022 bear market swing high. So looks good. Let's go ahead and check on a few other things while we're here. BBWP cooling down. Closures below the upper first. We'll see this cool down significantly more. We do see that Stoke is crossed down in the overbought zone, and the pivot is currently going to be important while Bitcoin is up here in the overbought and especially the bullish control zone of the Stoke here. Now, of course, this is a regular Stoke, not a Stoke RSI. This is measuring close over close price momentum, not the velocity of RSI. In this case, we can see the Stoke pivot is at 52,344. So back above 52,350, we would see this cross back up. We can see that the 2-day, which is closing with 2 days price action on the daily, we can see that the upper first is above that bear market swing high from 2022. It is currently coming in at $49,000, right at this wick high over here. And that gives us a zone at 49,000, as we had just talked about before, to that bear market swing high. Of course, then you just take it from there down to the monthlies at 47. And, you know, at least between that monthly swing high from the bear market and the $47,000 close. Then, of course, below there, we start stepping that down to looking at this entire liquid zone from 47 to 45.5. We can see that we are still looking at BBWP expansion. It is lurched over and headed towards the moving average. And if Bitcoin closes like this today, we are likely to see this cross over the moving average. But the moving average is probably not going to get a negative slope, at least not today. It's probably still going to be angled to the upside. So I do want you to keep that in mind, even though BBWP might get below the moving average. If the moving average is still pointed up and Bitcoin is trading anywhere above the upper first, bounces could send it right back to the upper second, which is currently at just above its local highs here, just above 53,000 at 53,214. And we are going to see the upper first move up. So this is likely going to end up somewhere in the, $50 to mid $50,000 region. So that is another very positive thing there. If all of this area was lost, meaning the upper first, the bear market swing high, the 2 monthlies here, we can see the basis is coming in at just under $45,000. So again, lending confluence to that area being very important. I doubt that Bitcoin gets there before close today, even if it were to dump off. This is likely to move right into the 45.5 monthly zone between 45.5 and 47. So again, more confluence for that area being very bullish if Bitcoin did pull back all the way to it. And again, there's no guarantee that it would get there. The 2-day is likely looking a little tired on Stoke. It is 52,250 is going to be the momentum pivot. This would be an initial cross down at the end of today if it closes anywhere under there. Let's go ahead and look at the 3-day. 3-day is still upside angled above 46,600, and the 3-day is a fresh candle. We can see that the upper first is just above that bear market swing high. This is also coming in right, well, it's coming in under 49. So this is coming in at 48,684, so almost 48,700. Again, lending confluence to that zone between 49 and the bear market swing high there at 48,240. If it's lost, we can see that the supports there, of course, you take in order 47 to 45.5. The basis is now coming in at just under 45. And, big area below that monthly at 45.5 if it is lost. The daily and 2-day are likely going to have major, not fib levels, but major price volatility levels in terms of Bollinger Band levels for volatility in the area anyway. Being the basis and the lower first on the daily. So basis on the 2-day, lower first is likely going to move in there fairly soon on the daily. And then the 3-day is likely going to follow through with its basis, especially if Bitcoin is trading anywhere above the upper first and above that $47,000 monthly. The 3-day volatility metric still well up over the moving average and 82 over 67. If Bitcoin does start losing that upper first, we will see this moving average and BBWP begin to converge. As we take this over to the 4-day, which is closing with today's 2-day candle, we can see confirmed expansion of BBWP, 55 over 31, and upside on Stoke on any closes above 44 or 285, so basically 44.3, looking very bullish on some of these longer term timeframes. And the 4-day upper first is just above the monthly there at 47,000, coming in between this bear market swing high at 48,240 and that monthly at 47. The upper first is now at 47,460, so basically 47.5, and would likely provide some nice downside support right at supports in terms of volatility on the 4-day chart. Now, the upper second standard deviation is below this weekly at 50,800. Coming in at 50,600, which, hasn't quite been tagged on the daily just yet. Of course, if it starts to lose its local lows on the daily, the upper second standard deviation of the 4-day is right there. Below there, on any closes for the upper second, and or if Bitcoin closes right here in this weekly zone at around 51, the upper second's likely going to move past the close open price, which would open up availability down to the upper first. So the upper first is likely going to move up slightly as it is, right around, that mid zone of this bear market wick high and the monthly support at 47. This is likely going to move up to around 48, possibly even into this monthly swing highs. We do see a nice compression to re-expansion here on the 4-day chart. So this is something to pay attention to at close today, is to check this chart. That will also give the upper second standard deviation kind of our bias buster for the upside. It can trade towards it. It can trade above it. Trading above it is more aggressive expansion of the Bollinger Bands to the upside and continued BBWP expansion. Now, during BBWP expansion and Bollinger Band expansion like this, you want to see price holding around that upper first if and when it gets there, wherever it is, meaning if it moves up, you want to see it holding on the move up. If price moves back down towards it, you want to see it holding at minimum on a close. If it does, it can wick through it. It can wick through it all the way to zero. As long as it's closing above it, expansion maintains, just so you understand that. The 5 day is another big major time frame to pay attention to. And, this isn't closing for a little while. It's going to be closing towards the weekend here, but the upper second is right above 51.8 at this weekly here in the weekly zone, coming in at $52,000. So trading back above it would keep volatility high in terms of Bollinger Band expansion, and likely targeting the local highs at 53 and higher, maybe even towards that upper third, which is in the mid $50,000 area, between $55,000 and $56,000. I don't know if it would necessarily get there in this particular 5 day closure, but the deeper $50,000 area towards 50,800 would become available over time. Dailies could hit up in that area, but from the 5 day and weekly perspective, as you'll see as I move into the weekly here in a moment, likely to get heavily sold into. But not necessarily a given, but likely to get some nasty mean reversion at least in the lower term timeframes. Now, the upper first is another big important one. It is above the monthly here at 47,000. The upper first is sliding right in between the monthly and bear market swing high there, and it's coming in at 47,763. So again, this zone between that monthly swing high at 48,240 and the top side of the monthly zone here at 47K, very, very, very important to watch should Bitcoin begin to head down that way. If it did fall apart, there is the downside support here at that monthly at 45.5. Of course, there's horizontal support and resistance on the daily and longer term timeframes as well. Below there, we can see that the basis is at almost 43,500. It is above this weekly support area at 43,200 and 41.8 in that weekly zone. That is encouraging. You don't want to see price getting down there, though, on the daily time frame, to be quite honest, because that would have some serious implications for expansion on the 5 day and weekly, as we'll see. The weekly upper second standard deviation moving right into this September of 2021 weekly swing high area, right around the $53,000. Straight above there, we can start looking up to the upper third around that monthly at 58.8. As a potential zone of interest. I don't think it would get there right away, but if it did start to close up there by Sunday, in the mid 50,000s, at least the following week, that would be a viable target to start entertaining in that 58.8 to 61,350. A little red candle like this on the weekly is not a big deal. If it does, as long as it is closing, though, if it does close below the upper second, the upper first is available. That's coming in just below the $47,000 monthly here. So very good area to have that upper first in, right in a support zone that needs to be tested, quite frankly. And to kind of revisit this on the daily, Bitcoin has been very methodical. We've seen Bitcoin testing, the monthlies after passing them quite often into the monthly weekly zone. So resistance at 35,000, move through it, kind of sit on it, and the weekly there at 34,750, move up to the next weekly area, spike directly into that monthly weekly liquidity zone at 35,000 to 34,750, regain those weeklies, move up to the next monthly zone. So you can see here, the monthlies here at 38,500 being tested and front run a little bit here. Direct test there, sit on the weekly, move up and close above the monthly there at 38.5. Test the weekly directly at $39,000, right? So we've seen these back tests, on the weeklies and monthlies come quite often. So this began to move up quite aggressively into the next weeklies here at that 41.8 to 43.2. Past it, nearly hitting that 45.5 monthly, getting front run by $500, coming down and oscillating around the weeklies, creating some nice horizontal support in the smaller range here. Going back up, directly testing the monthly at 45.5 after getting a nice wick into it. Hold on to the weeklies and then move up to the next monthly there at $47,000. While closing there, it did wick the bear market swing highs. Came back down to the weeklies, lost them, and then did what? Directly tested the monthly down below at 38,500. before moving back to the weeklies, swinging that bear market monthly swing high again. So, what would the next logical thing for price to do in terms of the way it's been operating in this current bull environment? Well, coming down and testing the swing high to the monthly zone and possibly even into the monthly zone. So that's your 48,240, your 47 to 45.5. That would be your direct tests. And it has done this from the daily time frame quite often. So I would not rule it out. And that whole zone can be filled all the way down to the mid $40,000 region. Not a given, but it is something to watch should this local consolidation break down. If this local consolidation does not break down, the most obvious path is going to be up back to at minimum the local highs at 53. If it starts closing above there, mid 50s to upper 50s, low 60s. So pretty darn easy. Let's see if we can get a little bit of a bias on some of what's going on here from the 12-hour. All right, the 12 hours compressing. This is what we want to see. I did mention this in yesterday's staring at charts pre-recorded video here. And the 12-hour is something to watch, and it's going to be basically the 12-hour as it relates to the 4 and 6 hour is going to inform what's going to happen on the daily here. So we can get our edge on what is going to happen by looking at the 4 and 6 hours it relates to the 12-hour, and then whatever happens on the 12-hour is probably going to follow through on the daily. So in this case, we're looking at compression of the Bollinger Bands. So Bitcoin's not quite ready for a move yet, but it is cooking, right? So this can come down to the lower first. That would be a deviation of the local low range, but it would be right into support areas on the daily and 12-hour down here, somewhere around 50,000 to 50,500. If it does get below there, then we start looking down to the lower second in a bullish position still, at least for the lower term timeframes. If we saw it closing below there, well, then we're looking further down. Well, where is the lower second coming in? Right into an important area there at the prior deviation swing high at $49,000. Now, if Bitcoin can regain the basis at 51,383, then we can start looking to the top side consolidation on a close and somewhere around the wicks of the local highs here. The upper first is currently coming in at 52,500. Above there, we're looking to 53,000, possibly that upper second, which is coming in at 53,650. This is likely going to compress in on itself a little bit more. And then we start really gauging, lower second. If the lower second's dropped, we're looking at 12-hour expansion to the downside into those supports somewhere around 49, 48.5, 48,240, 47K, so on and so forth. If it does start to pass, the close over here, especially at, this is at 49,725, then we're definitely looking at 49 getting tagged. If it drops the wick low there, we're looking at expansion plus dropping the wick low, but then there's support right below it at 47.7. And then there's candles over here at 47, just above that monthly. So, it could expand down into the support there, and then we start gauging for when it could possibly turn. Maybe there's some counter trend trades to be taken. All remains to be seen. But if it does compress and then begin to take out the upper first and second, it's likely going to run the highs and highs to the mid 50s. It's pretty darn easy to the upside and pretty darn easy to the downside. Now we will see that, Stoke is pointed down. 52,718 is going to be the momentum pivot, for at least until the end of today. It's going to update and probably come down to the mid 52 region, maybe even low 52 region. So it is something to pay attention to after close today, along with that 2-day, 4-day closure that's going on. And, there's not too much. It's only one drive. Only one valid drive of bearish divergence. I like to see more for a full-on reversal. Let's look and see where the bearish control zone is here. Bearish control zone's coming in at 47,644. That's likely going to update to somewhere around 48K at close today if it doesn't get there first. Midline is going to be 49,950, so basically $50,000 right at the scale midline there. So quite honestly, I like to see more drives of bearish divergence, but it could, potentially, if it starts to lose 50, we're looking down into the, that $48,000 to $47,000 range by the monthlies. So I kind of want to see a test down there, me personally, Doesn't mean that we're going to get it though. Let's go ahead and look at something like the 4-hour, and then we'll jump to the 6-hour. So we do see downside expansion below the lower second on closes here, and trading below the lower second for Bitcoin now at, we'll call it $51,000. So back above $51,000, it just needs to get above basically 51.5, and then it's right back to the upper, that upper side of the weekly at 51.8, where the basis on the 4-hour is. But if it is going to get continuation on expansion, we do need to see this wick low, and you could call it the current wick low. It's only a couple bucks here. 50,628 needs to be dropped on a close to go test and expand down into, at minimum, 50,500 to $50,000 over here at this high side structure. Now, if it does get there and then aggressively bounce back into range, well, probably looking at the end of the 4-hour move at least, and you're looking for trend at that point. Now, we do have lower high closing trend with a higher high swing, but we've got lower highs and lower lows right now. So we do have a bit of a trend shift. This is more of a consolidation structure at the moment, but it is a downtrend shift when you're looking at a swing chart and even on a closed chart. So we do have trend, but it's right on supports, and it's right next to supports that are a little bit further down. 50 to 173 is going to be the momentum pivot. That's going to update twice today. So if it doesn't break down by the end of today, I would keep very close eye on the 4-hour. If this fails to break down on the 4-hour chart by the end of today, specifically below basically 50,600, 50,500, which we talked about on Monday, that's kind of where I'd be, paying attention. If it fails to break down from there, if it breaks down and then pops right back up, we're likely to see a stoke turn on the 4-hour here. Let's go ahead and look at potential for divergences on the 4-hour. Bearish control zones right here too. Typically get a nice bounce around the edge there. That's 50,600, so right around the lows. So it could be going in for a test now as we're speaking. I'll check the lower term timeframes because we are live as it's moving a little bit more aggressively towards the low side. But we're looking at divergences being populated from longer term, from very, very low. I mean, this thing's going to throw divergences. They're all not local, so they're not going to be as powerful, and they're probably not even going to populate. But let's look at the 6-hour here. 6-hour stoke is down below 51.8. So basically the weekly gets taken out at 51.8. This is going to turn up, at least as it stands right now, for this is going to be running through close today, I believe, right? Yep. So this is going to be running through close today. So something to watch, because this is going to start getting into the oversold zone pretty soon. It may not get there at close, but the first few closures are the first 2 6-hour candles, that being the first 12-hour candle of tomorrow's open, is going to be of interest from the 6-hour perspective. And of course, you're looking for 6 and 4-hour to play into that 12-hour there. But they're getting into areas in which, if it holds this low, which it's going for right now, it seems, on a close specifically, I would keep an eye on a throwback right into range, and then if not, come back to it later for some of those further downside targets. Let's go ahead and actually look at something like the hourly. The hourly is just kind of riding. This is a very structured drawdown. 50,800, which is the weekly. It's not far from that number. So back above the lower first on the hourly, and this thing starts to shift around on stoke coming into the final 4-hour close of today. It's just got to hold its local lows. If it loses them, then we're looking for, mid to low 50s, possibly into the 49.5 region for a test, as I mentioned over here. But mid to low 50s sitting on this structure over here, which is untested, would not be out of the question. There's also a little bit of structure right here in the upper 40s. And if it loses this low, specifically down here from the hourly and longer time frame perspective at 49.253, then we're starting to look at this zone of interest down here. So the high side structure here, somewhere around 48.5 to that upper $47,000 region. So pretty simple stuff here, nothing too crazy. We could even take that low side there because there's a whole liquid zone there with that consolidation. You could pick the highs if you want and kind of tighten that up to $48,000 if you'd like. But that's primarily where I'd be looking. Below 49,250, it's probably going to head into the upper 48s, mid 48 region, and then we see if it can push down further towards that March 2022 high, possibly even the monthly. But let's go even lower term time frame and see what the half hour and 15-minute are looking like. This looks like a pretty decent drawdown from those time frames. This might actually have a little bit of juice to it. It does. 51,269 is the pivot for the 30-minute. It is starting to build some bullish divergence here. You'll note that the hourly hasn't really yet because it's struggled to set a real low. But if it holds the range, it has longer term divergences, but it really only matters on some of the longer term time frames, like the 4 and 6 hour, which aren't in the range for bullish divergence just yet. The 15-minute, though, is attempting to hold on for dear life. 50,861, so back above the weekly there at 50,800. It's looking like it might try to bounce back towards 51 and a half. Let's see. Can we get a little bit more edge? We can. Let's look at volume. Yeah, so basically if it loses, where's the high volume lows? This higher volume low, all of these were on the highs. This was on a high. And let's see. Yeah, so we do have a couple of wicks down here for higher volume. But they're going to come in around the same area, I bet. They are. So from this low side structure, there's only really two really important higher volume wicks. So there's 50,680. There's this guy here, which is not quite as high volume. But it is higher volume than even what we're seeing right now, at least currently, as it gets a little bit of bounce off this region. 50,764. And then this current low wick at 50,628. So we kind of have a bit of a zone here. This being the lowest low so far. So if it's trading and closing candles above this zone, you can extrapolate that out to this wick here and the low wick just to clear up your chart. Doesn't really matter. But if this starts to break down, we'll be seeing lower prices, right? So that's, a swing of it is fine. A move down to 50K, if it bounces back into this zone, this is going to be the one to watch. About 50,600 to 50,764. So that's going to be the area to watch for closes. And here we are bouncing back into the weekly at 50,800 there. So, it's testing. If it breaks down, I think it's going to, we might see some larger volume come in, but it's probably going to be pretty structured unless something crazy happens, like a big leverage liquidation, which likely results in wicks anyway. All right. Let's go ahead and move off of Bitcoin for a little bit here. I think my thoughts on this are pretty darn clear. And it's honestly really easy right now. This is dead simple trading, or dead simple ranges that you can set up your trades around, I should say. Let's go ahead and take a look at Dixie and see what it's doing. Dixie on the daily is hanging around its basis band. So it's still in the strong half of its bands, giving it the opportunity to run its local highs and higher still. If it can maintain this and get above the resistance here at 104.25, basically we're looking somewhere around 104.40 to 104.55 again. Above there, we're looking to the upper second, right around the closing highs at 104.84 to 105 at the high side structure there. Above there, we're looking to the upper third, about 105.40, possibly even to 105.60 up there. If it does lose the basis at 104 and drop this wick low at 103.80 on a close, the lower first is right around these highs. So we're probably looking at mid 103 region, 103.60 or so. Below there, then we're looking at the lower second, which is coming in and around these lows at 103 to 103.10. And only if it were to drop this low over here at 102.77 would we be looking for 102.5 down to 102. Right now it looks fine in terms of its structure. Is it still bullish? Yes, as long as it's closing above the basis. Things can switch around. It can even go hit the lower first and still remain bullish in this case because of horizontal support and resistance. 104.71 is the momentum pivot that's likely to continue with its downside pressure. The 2-day as well, coming back into a compression after hitting the upper second. Being below 104.25 does provide for that target there at the basis around 103.5, 103.40 in this case. Below there, we're looking at the low side of the range, somewhere around 102.5 at the lower first. Now, the 2-day is also pointed down for Dixie here. So pivot's going to be 104.67. This could easily get a bullish reset, though, if it does start to rise again on the daily and take out some of those areas to the top side that I just spoke of. So keep that in mind when watching Dixie. Let's go ahead and check up on gold. Well, gold got a nice daily bounce off of the low side structure here, making this a bit wider of a consolidation at its highs. So if it was to drop that, 1990, 1980, we can look at the daily wick low over here at about 1970, 1973 first before looking down to 1960. And this is a big zone around 1960 to 1930. As long as it's trading, back above its basis, it will have the opportunity to go hit 2034, 35 to that upper first around 2040. Above there, we're looking at the local high side structure here on a close at around 2050 to 2055. Above there, we're looking towards 2070 to the highs there around 2080. If it can close above there, then we're looking for 2100 to around 2150, maybe even 2200 over time. If it does aggressively drop, its local lows, its continued downtrend, the pivotal area is going to be this close open here at around 1980 to 1973. Starts getting in there, it's got to go for liquidity in the mid 19s to low 19s. The daily is pivoted up on gold. 1991 is the momentum pivot. It is trading well above there today. So it is pressure up. Looks all right for right now. It's in a consolidation. The weekly did hold the basis band as well. So as long as it's above the basis band at 2014, 2015 area, we're looking for, in general, its top side, which it could have, to be fair, already hit. But in this case, we're looking around that 2034 to the upper first here, which is coming in at 2050. So right around the highs of the daily there, 2050 to 2055. Yep. We see nice compression into this area as well. The lower first now at 1980. So again, we're getting, the bias towards dropping that area would, give us the bias to start looking at 1960 down to the lower second at around 1940, 1950, possibly even 1930 down there. But this is nice compression on the weekly. And we do see that the weekly, if it compresses like this and it can maintain its structure here in the local range above around 2000, we could see the weekly result in a bullish reset of momentum. Now, currently, that is an aggressive momentum pivot at 2070. But, it's rising this week. This is going to come down, so it might get closer to the pivot, depending on where this weekly closes, especially if it's closing anywhere around where it is now, the 2020, 2030 range. So this will likely drop to somewhere around 2050 to 2030 anyway. And this will start to aggressively drop off the pivot if it does, especially if this starts to close above this wick high here of last week's candle, setting a swing low. That would be around 2032. So keep an eye on that. That is something to pay attention to with gold here. Actually, it's a pretty good setup considering what the daily is, as it may lead into the weekly. I'll bet the 2 days ready to turn on Stoke as well. It is. 2-day is closing today, and any closes above 2014, we're going to get a Stoke turn with bullish divergence. It's really just got to complete getting back above around 2030, back above the basis to start testing in and around 2040, 50. So this is a pretty prime setup on gold. It just, we need to see follow through. That's all. All right, let's go ahead and take a look at traditional markets real quick here. We've got Dow consolidating on the highs, strong above the basis. If it does drop it, it's still within range. Lower first, perfect positioning, right around the this low. It's a little bit above it here at 38,150. If it did drop it, the wick low is likely to collide with that lower second after this closes today here. And that is coming in at around 38. The lower second is just below there at 37,934. This is likely going to head up into around 38,000. So closes below there. We're looking right to supports there in the upper 37 to 37.7, 37.8 around these closes. Below there, then we start looking towards, 37.5 to 37.3, and then below there we got to pay attention to 37.2 to 37K or so around this particular close. And expansion into those areas on the daily is not a big deal. That's nice mean reversion on longer term time frames. On the weekly, that's probably going to be the prime zone. Any closes below the upper first around 38, 383, 38, 400. Then horizontal support resistance mid 37s to 37.7 to around 37K. Below there, then we're starting to look at the weekly basis as a viable target, which is in play, but until we see the upper first broke down from, and then see where the basis comes in when that happens, and or if it's still sitting here at around 36,400, 36,500 range. It's above this high over here, and this is really strong. It's right around the high, right around the previous highs. So this is looking really good on the weekly still from the Bollinger Band volatility perspective. We've got, I want to see higher low structure and swings start to develop if this is going to continue on in this manner. If it does take out this higher low swing structure, then we're definitely looking back into the mid 36s to $37,000 is the prime zone for price, and then evaluate to see if it's going to break down further from there. But weekly is very hot to trot, but we don't even see weekly bearish divergence just yet for the local move, meaning in trend. Over the longer term time frame, lots of bear divs. Those are not as powerful as in trend bearish divergence, and we don't see that just yet on the weekly. So looks good, fresh breakout. It can stay in the bullish control zone all the way down to 37,689, 37.7. So that's freaking beautiful, man. That's local range. And as long as it's in there, it can deviate it. It would still be bullish. So looks fairly decent. Daily is still in the bullish control zone. Looking to lose that area and probably head towards the midline here on the closes below 38,550. And currently only 40 points below as it continues to try to hold on to that basis. again, above the basis band and even the lower first in this case, which means it could come down to around 38 to 38.2. It would still be bullish. Below there, then we start looking under 38 to, the upper 37s. So, and from the longer term time frames, it's still bullish. We see that NASDAQ is dumping off to the lower first. If it does lose it, the next big area to pay attention to is going to be right around the lower second and this close. And that's going to be at 17,200 to around 17,130, 140 area. If that area is lost, then we start looking at a possible gap fill down here at 17 to around 16.9 or so. I would give it some room, maybe even to the upper 16s, around 16.7 to 8 in this area. Really not concerned about this falling too much further unless it were to lose this wick low into that close at around 16,550, 16,500 or so. So it could even get expansion down. Not too concerned about it. Back above 17,740, we would be looking at this turning back up. This is many drives of bearish divergence. So the bearish control zone is a likely candidate unless it can keep throwing hidden bull divs and holding price up in the local ranges on the highs. But the bearish control zone is at the upper 16, so 16,830 right now. And, that's the equivalent of coming down and testing this high over here, basically, right around this high to the prior all-time high there at 16,764 or so. So basically 16,7 to 8 would be the primary target around that bearish control zone. You want to see price kind of hanging out there, develop some bullish divergence on some of those lower term time frames, and then come back to it. 12 hours is going to be right around where the daily is. 8 hours still headed down. 6 hour pressure down. 4 hour pressure down. So yeah, I mean, this is likely to come down a little bit more. Really depends on, if this hourly can change trend. If the hourly can change trend, this is probably going to head right back up. And that would be on any hourly closes back above 17,550. And of course, the daily momentum pivot is slightly above there at 17,740. But this is likely going to come down. Seeing a close like this, you're probably going to see this right around where that high is on the hourly. So I would pay attention to this hourly trend. If it does get a trend break around 17,550, today or tomorrow or the next day, and it's not getting continuation, but it bounces and gets above there, well, it's got to start by regaining the lower first at around 17,413, heading towards that 17,550, and take out that basis as well. It's slightly above there at 17,580. And then we can start looking at the low side structures there, which are going to be right around the daily pivot. It could reject from there if it did head up. And then you're looking at downside from the daily in terms of pressure, but you looking for if there is a trend break for, first thing you look for is higher lows, and then you come back to it later. This could potentially throw bullish divergences. No. Yes? No. Yeah, it could. Yeah, from this low right back here. And even if it does get down a little bit further into the low 17s, upper 16s, it's got bullish divergence from the longer term time frames that it'll likely throw, and come back to it later. To the upside, back above 17.8, we're looking back to 18 at the upper second. And it's really going to be all about upper second, lower second. If we do see expansion below the lower second on closes, need to see 17,128 taken out to really start looking for expansion further down. And then we need to see the upper second at 18 taken plus the wick for more into the 18.2 to 18.4 range or so. Let's go ahead and take a look at SPY. 495, so 5 points off its highs here. At least at 500, that was our original, and then 505 was next. That's 5 points off the upper first here at 499. And what did we get? We got 503.50. So that 500 to 505 range got tagged and filled out. Now it's back to the basis, strong above the basis as long as it's closing above there. Below there, we start looking at the lower first. basis is well above 491. So honestly, I would start to look at 491 as being a big area to this wick low. We've got a few wicks. It's actually this close up. We might as well just take the lower first at 488 to 490. If it starts to lose that area, then we're looking towards, 485 by the lower second here to 480 down here by the support. We see that 497 is going to be the momentum pivot for the daily. And let's compare that to we're seeing on, multiple drives of bearish divergence, scale midline. And we do see a trend shift into lower lows as well on RSI. So we've got midline is at 490, so 48 to 490. So that's the scale midline. Bearish control zone is 475. So that would put it right in between the all-time high and this support structure here, right around these highs. If it did start to lose this area, but it would start to get expansion on the 2-day, which means that bounces would likely get sold into from the daily perspective. All right, so lower second on the daily is what I meant. So that would be expansion below 483. This is going to move up to somewhere around 485 anyway. So between that area, if it didn't bounce from like 480, looking at expansion down into the deeper area, 470, 475, and then come back to it. All right. Yeah, as long as it's closing above 490, 480, the upper first on the weekly, it's looking fine. If it does mean revert really hard, the weekly's got the basis coming in around 465. That's likely going to tick up to around 470. So 470 to 480, about a 10-point range. Pretty volatile, when you're looking at SPY. It looks pretty good so far. It's nothing too crazy going on right now, nothing unexpected. Could you be getting a daily double top with bearish divergence? Absolutely. It's still got to drop this wick low, though, at 490 to go and test further down to 48, 490 region. Could get run, and it could even bounce from there. But if it does lose it, then we're likely looking down to 480, 485, and then below there, 470 to 480 as being the big area of interest. All right. That's going to do it for the bulk of analysis today. I did get a note. Yeah, I know NVIDIA, the most important closure of the century, man. It's coming in today in terms of earnings. So what is their estimate? Yeah, 4.8. Yeah, let's go. Let's see more on their financials page here. Market capitalization, 1.65 trillion. All right, so what are we looking for in terms of projections? So their estimates, we're looking at 59.26 bill and earnings at 12.39. Could it get there? Sure. Is it likely? Who knows? I haven't really paid too much attention to it, but if it misses, it's probably going to be bad for traditional markets in general. It's part of the Magnificent Seven or whatever they want to call it. It's basically NVIDIA and a few other companies are just propping up the entirety of the stock market while the rest bleeds dry like shit coins in the altcoin market. So, likely what you're seeing on the drawdown is a spread, call option spread range here. I mean, we can get a bias for what's going on here. Closes below 723. It's downside pressure. Don't really, kind of have a double top in RSI here, but no real. Yeah, it's not really like stupidly bearish, reversal bearish, like long-term reversal bearish. This could come down to the lower first at 630 and still be looking good in terms of trend and this push up to get filled out, maybe consolidation or something. It is heavy pressure down from the daily, probably the 2-day, 3-day, 4-day, all of it. Yeah. 744 for the 2-day. 3-day, we're looking at 717, trading well below there. But again, it's all above the upper first on most of these. The 2-day is losing the upper first, so giving us a 608 target. That's the low side of this order block over here in that consolidation, where 630 is the high side, 610 to 60. Let's see, what's the low side order block there? 605 to 630 or so being the basis on the 2-day. 3 days still above the upper first on closes above 656. 4 days 637. Everything's turned against it right now in terms of momentum, but it can very easily, pop right back in. It's not that crazy for this to do that. Avoid bearish divergence on the 5-day as well. Upper first, though, to be fair, is right in that low side area around that 605 610 area by the basis band on the 2-day. So still got room even at that. 626 is the upper first on the weekly. This thing's still, and this is strong as hell. It's a parabola. It's all gonna fall apart, guys. No, not really. I mean, unless you start seeing distribution happen below. Fuck, man, what a drawdown that is. That's an aggressive drawdown. And even the weekly down to 530 is crazy. That's a crazy big drawdown, and that's literally drawing back to test prior resistance as support. That's crazy. What a bonkers ass stock. And they say Bitcoin's too volatile, right? Look at the fucking drawdown. Look at the markups and drawdowns, but Bitcoin's the problem. Look at the overall chart for Nvidia, but remember, Bitcoin's too volatile. And morons. From the 18 to 19 lows, which, by the way, bear market lows into that 2020 crash, which was a blip back to support, man. What a superstructure this thing's got going on. Can it keep it up? Yeah. I mean, could. It could very well. Let's look at this on the weekly, though. It's right around the 618. Go figure. So drawdown into 2022, right back up past the 1272 where it kind of consolidated. Man, it just blasted off through the one spot there, through the highs, right to the 1272. Paused, 1414, paused for 1 week, and then right up to the 1618. Beautiful. And yes, this is log with log fibs, and that's how you should be using it. Lower first is right back to its prior all-time high. So lower second, sorry. That's not even the lower first. That's the lower second. It's back to the one spot. That's, it would have to lose its structure around $400 basically. And then it would be pretty bearish to go test the prior all-time high. Like, give me a break, man. What a freaking, this thing this is still in an expansive phase, by the way. So like, yes, it's getting bearish divergence, but it's still expanding on the Bollinger Bands, which means that it's more likely than not, should it fall apart, to just come back and retest this 1272 high side structure of the prior, for a retest basically of support as support. So that's a general bias that I would have on this as it stands right now. You got your wave count guys going, oh my God, it's gonna die. $20 Nvidia stock, guys. The whole AI market's gonna fall apart. As they're announcing brand new shit you can do with it. Like, how long can they keep it going? And as long as they're above 630, they're fine. They start losing 630, it's gonna be, it's quite a drawdown. I mean, it's already, if you're in this from the highs, if you're buying calls at the highs, guys, at 746, you're already feeling that pain. We'll see what happens. Yeah, super micro is probably pulling back. It's SMCI, I believe, right? Super micro computer, not crypto. We want stocks. We want real shit, bro. What about this real shit that doesn't absolutely look like a shitcoin chart? I mean, come on. This looks like a parabola shitcoin chart. Like, but, you know, the volatility, guys. I'm sorry. Was this not volatile? Bitcoin's too volatile. Let's go ahead and take a look at how volatile this has been on its breakout. I mean, come on. Anybody that starts to tell you like anything like, oh, it's crypto is so volatile, guys. Yeah, okay. Freaking markup of 66.88%. That's crazy. I mean, from its low side structure, just from its low side structure, 400%. It's basically a shit coin on the daily. After this consolidation, it was like, boom. And then it's just now mean reverting back to its basis. To its freaking basis. Come on. Come on. Oh, it's so volatile, guys. Well, if you're buying the high and it's mean reverting, even in a nice big bullish structure, you're going to be hurting. Oh, it's too volatile for me. I sat through a 35% drawdown. Oh, come on, man. It's trading like a freaking cryptocurrency. And cryptocurrencies just trade like stocks. They really do. There's plenty of rugs you can find in the stock market. So, I mean, is this due for a nice pullback to the basis? Yeah. Is it strong above the basis? Yeah. Is it strong above the lower first? Yeah. Is it strong above the lower second? Yes. The lower second is actually right around or right above its prior consolidation highs. So, I mean, this thing is literally bullish all the way back to $400. Do you want to see that? No, you don't. But what has happened now is it would increase volatility during that time period in between on the daily. And this is fresh expansion on the weekly. But Landy, the Stoke has turned to the downside. Oh no, it's 1024. It's literally getting computer numbers in here. So if you're an actual nerd and you understand how bits work, then that's a funny number to have as a pivot. Anyway, I mean, this thing can mean revert back to $560 and it's just fine. This thing could literally on the weekly, come back to 360, come back to 380 to 400, and it's freaking beautiful from the weekly perspective. This is, this is aggressive expansion to the upside. So to be fair, this does need to cool down. It's likely going to start its cool down this week. Maybe it plays around the highs some more after a little bit of a bounce in lower term timeframes. We'll see if Nvidia, if they hit their projections, market's probably going to go up. If they missed, probably going to drop pretty hard, and everything's probably going to follow. So I don't set up a golden zone. I mean, the golden fib is the 618. So if you're looking for fib advice, I mean, we can just go local range here. You pull swings. So you got to swing high to swing low here. This was this swing low prior. You don't need any of this. That was just an example of showing you the range breakdowns here. But if you want, this is the current high to the current low. If you want to pick out the 618 and you're looking for maybe continuation to the downside, you pull the swing low to, swing high in this case. So you're looking for the 618 coming in at 5150, 51,552. I'm sorry, 51,521. I'm not dyslexic. You are. You can see how that 1272 and 1414 line up to the downside. Realistically, your 618 is just an inverse 382, so it doesn't matter which way you pull these. So you pay attention to the 618 or the 382, and weak below the 50% in this case, strong above it, right? Back to the zero read or below it, looking more towards that one spot, towards the extensions if it breaks down. This is my setup. This is it. You just have to customize your fib. You just go in here and you type in the numbers you want. I'm not going to reset mine because it's such a pain in the butt here, but I just use you don't even need all the fibs I have. You can just do a 0, a 382, a 0.5 or 50%, 618, and then a one spot, right? Like you can do it however you want. You just double click the fib and you customize it, if that's what you're asking. I just have my fib set to log. It doesn't matter when you pull them log on lower term time frames like this, because log and linear, there's going to be no difference. It's the higher term time frames is where it makes a difference. You don't really need like the 1910272, which are custom. You don't even need the 786. I mean, it is helpful, but that's default. The only ones that aren't default here is the 888, the 191, which is, you could make it a 192 if you want, which is just an inverted 888. I believe it's the 236, and I have a 272 instead, which is, roughly lining up with the 786, but it is not. It would be it's a little bit different. Realistically, if you're just looking for golden pockets, you're looking, 618 or the 66 to the whatever 68 or whatever. I don't know. You can do whatever you want. I'm not in the sniping game, nor do I really care. You can see how this, how this operated. It did spike up towards the 382, didn't quite get it. I mean, we could go and say like, okay, well, this is log, Landy. It's going to be way different on, oops. Well, it automatically adjusts it, but if I go here and I turn off linear, or go to linear and I look at linear, it does nothing. So when you're on lower term time frames, just keep your fibs on logs. On log scale, it's only going to matter when you go to the higher term time frames where it's going to be more accurate. In the daily and lower term time frames, you're going to get minimal variance versus linear or log. So I just keep my chart on log, keep the fibs on log, and you're going to see that things line up very nicely. I mean, let's go ahead and have a little fun with fibs for a moment. Like the local consolidation, for instance, you can pull the local consolidation. Where's the high? There's the high. So, and you can see how price reacted even locally, and then how the extensions. I just have extensions. They're just copies of this on the way up, except I used the 1272, the 1414. I guess the 1272 is 236 is going to be local. 1272 is typically extension. 1414, 1618, 1786, 1888, and 2-spot. You can see how price looks when measured this way. You're literally measuring percentages, right? So you can see in this range how price has essentially rejected around the 888, which is one of the reasons why I have that. You can credit Torque for that one and the back testing of it. And you see the 272 to the 191 kind of bracketing the downside here. And then the 786 and 618, 786 and 888 of this tighter range, which is the equivalent of the 272 and 191 on the downside, which is why they're colored teal in red because they're basically the inverted. They're not exact. You can line the numbers up. They're no longer fibs if you do it that way, though. They're not Fibonacci. They'd be percentages. You can take it in the Gann theory, which is percentages. 50% of the range on the lows here. Weak below it, likely to head towards, the lower fib levels and the zero. Back above the 50%, if you can get above the 61.8% or 618, then you're looking in the strong half again, right? So that would be your consolidation fib area. Rejected the 50%, so it's weak. Likely to go test down. It's right at the 382. If it rejects there, you're looking down towards the bottom here, support and resistance, and the lower fibs. It's not always going to be perfect. It's not always going to be great. We can even extrapolate this out to the 4-hour, which is the most recent swing. And I would advise, if you're going to pull fibs, that you use the swing chart. It is a little bit more helpful in that regard. If you want to take the swing high to swing low, very, very easy on the longer term 4-hour to see like 618 or 382 in this case, depending on which way you're pulling them. Break down below the zero, and then you have negative fib extensions. You could just invert your fib. When it passes the zero, it's a breakdown to the next horizontal support and resistances, right? But you can see the local range. The 382 was holding price up, deviation down to the lows, but this is a wider range fib. So you can see how important that 382 was. Deviation below. If it can regain 51,521, then you got to pay attention to what? 51.8. That's directly at a weekly. That's the 50%. Above there, it's stronger, especially above 52, the 618. And then you can do stuff like, pull this out to the daily. You got the swing chart on, if it loads, right? And we can say, okay, this is the higher high. This was the last low. So you can fib the most recent swings. And you can see that the 618 is coming in at 48.5. 50% is at 47,300. So it's above the prior resistance. 382 is at 46,000, nearly at this wick. You can take the consolidation low as well if you like on the swing to the consolidation high, and you can really hone in 48, 425. So coming into that 618, right around that bear market swing high from March of 2022, right, which is coming in at 48,240. So you can fib that out, and you can see the 618 is a big area of interest, strong above where the monthly at $47,000 at the 50% fib. You could take the whole move from the last swing low to the swing high, because then you're really, what are you doing? You're measuring the weekly swing to the current highs, right? So because you're measuring the weekly swing in January at the low at 38,500 at the monthly to the current high at 53, when we go back to the daily here and we look at how things line up, well, we've got the 618 right there at just under the monthly at 46,900. We've got the 50% fib coming in at 45, so just below the monthly at 45.5. So we've got this basically right in line with our horizontal support and resistance as Bitcoin dips below 51 again. 382 is at 43,500, and look at that. This is, you invert your fib. This is a 618. 382 is going to be right above the closing consolidation here on the daily prior to the current move up. A move back to the 786 after losing the 888, not out of the question. That's coming in at 49.5. So we've already talked about that area. Around $50,000, get below there. Then we're looking at, 49.5 to 50,000 at this daily order block zone before getting 49 to that monthly zone at 48,240 to 47K. On the high side of that support. But, If you're going to take the weekly, though, you can take a look at this. You can say, okay, well, this is still not put in a swing high just yet, right? So we can take the prior step down, and you can see this is the 1272. So from the perspective of the weekly swing chart, we've got our higher low swings, right? And from the last move, you've got if you're an Elliott wave person, you've got your wave count here. So what is going to be a valid wave count is probably going to be higher time frame anyway, but it depends on how you count waves and what fibs you're adhering. You're using to adhere to the rules for Elliott wave theory. But in this case, you can see pulling this move. This was the 1272 at around 52.5. The 618 is where all of the closes were rejecting from at 44,745. So basically $45,000 at that 618. As long as it's above the strong half of this prior move at 43,500 and the strong half of its current move at 45,200 basically, then it's looking good for continuation to the upside. That's how I would gauge that. It starts dropping around 43.5, probably looking at big drawdown into 40s and maybe even upper 30s again, but it's not my first take on price right now, especially with any closes coming in above 47,500. That's really going to be the key. That monthly zone, top side of that monthly zone at 47 to 47.5. As long as it's above there, it's strong. Still looking at pressure up on the weekly. So, and if you want to get real funky, take the prior move from its swing. You can see that the swing high to the prior swing low. So this higher low structure from this downtrending structure to the higher low, higher high, where that wick come in right into the 618. If you want to pull this out to the actual prior range consolidation prior to the breakout, it had the opportunity to come down even further to 38, but it did not because of horizontal support and resistance at the monthly at 38.5 that was getting bid off of on a very low time frame, only like 1 15-minute candle, I think. So looks good. Is it a little bit of an M pattern at the top? Is it going to come down? Who knows? But I can tell you that fading in a swing position, at least if you're trading and you're fading this to like really low levels, right before the halving, maybe you get lucky, but it's tough. So it's playing beautifully in the fibs. It's playing beautifully in the bands. It's playing beautifully on support and resistance. It has all of the ingredients that we're looking for an all-time high run very shortly, maybe even before the halving comes in somewhere around April. I think it's estimated to be 420 to 422. So April 20th to April 22nd of this year is the estimate currently, but excuse me, this is not static in the background. I just have a giant ass beard. My apologies as my beard rubbed up against the microphone. I should probably tame this damn thing. Like a mountain man behind a computer screen. All right. Let's go ahead and just draw our attention back to the monthly. That monthly support, remember I just said about what I just said about 37,500. That's the upper first on the monthly. So understand when Laney's talking about this stuff, this is all going to have confluence, right? If you're doing it right, all these things should be lining up. So 37,400 to 500 area into that monthly at 37 is going to be a confluent area with the upper first. So very strong looking. And to be quite honest, from the look of the candle right now, as we're approaching the final few days, the final week of the month, you know, if it 47 and a half and then 37 and a half, you know, if it starts to drop the 40s, if those areas were actually tested, you know, this would be below the monthly at 38,500, right? That would be stupidly aggressive to the downside, likely wash a lot of derivative traders out of the market completely. And, you know, I think up's the name of the game after that, if that were to happen. But right now, this is stupidly bullish above the upper second, which is, I mean, shit. That's in the monthly zone, like dead center, right between 47.7 and 45.5. Coming in at 46,375. So it's 47,000, sorry, and 45.5. So, I mean, at 46,375, right at a major support level for the upper second, pullbacks to that area, entirely logical. And we're going to see aggressive expansion on any closes above there coming into the monthly close. So we'll talk about that again on Friday, headed into this weekend's price action. But this looks great. Anybody that's sad about what's happening with Bitcoin is sad because they missed wildly on their, you know, $8,000 to $12,000 calls. So I'm going to go ahead and turn on the tunes, and I'm going to come over here and read the chat a little bit before I start wrapping stuff up. Bobby, your message is redacted. I don't know why or what you said, but you have been censored by something. Not me. But that is kind of funny. All right, let's go ahead and get some chill background music here. And let's take a look. You'll have to retype whatever the hell it was that you were trying to type. Unless you deleted your message. All right. Hello, Spin. Hello, Baba, Sam, Jedi. And obviously Bobby. I think there's quite a few others here that just aren't talking. Yes, there is. You did delete it. Wasn't relevant. No, let's see. Injective. I can take a look for you. Let's go ahead and take a look at Injective. I think it was looking fairly strong the last that we had looked at it, but I don't remember. Yeah, so drawdown within the local range. This is market cap though. I don't want market cap. I want Hi, Don. Hello, Kryptonite. I can look at stacks in a moment. Yeah, you have to watch. You have to go back and watch a little bit. All right, so I think I'd mentioned this before. This is a nice bullish consolidation. Could it result in a breakdown? Only if the wider market breaks down below $29 here. Yeah, I mean, even then it's got room to 28. I mean, the daily is curling over. It's neither bearish nor bullish right now. Bear control zone is at 29.78. So I do want you to be aware that it could turn bearish very quickly if it starts dropping its local lows. It's good above 29.30. Last line of defense for this is going to be at 28.36 to 28.50. Look, it's got a little bit of a wider range as it stands right now between its close here at 31 and this little spike low. swing, I would say that this is going to be the zone to pay attention to. If it drops this area, this is where you're looking for, probably a deeper pullback into mid to upper 20s and then possibly down to $20. There is decent support in that area around 18 to 20. It could step it down to the prior highs in the mid 20s though, if it did lose this local range, and it could hold it. So I would be aware of, where things are on these previous highs back here. For this weekly, you're looking at 20. So it's a pretty wide range to around 25. It actually was a little bit higher on the swing at 25.33. So this would be your big liquid zone to find as support. Otherwise, it's going to step it down to like 17 to 18 bucks by the lower, maybe even more by the lower first. But it would still have to break down from 28.34 on the daily, follow that through with the weekly to come down and start tagging this basis. Now the basis is moving up pretty aggressively, so I would expect it to find it within the local daily range pretty soon, maybe even the weekly swing, which is down here at 29.32. So you're looking at the mid 20s on the high side there for the weekly if it starts to lose the local range. So that's what I would be paying attention to the downside. Even right now, it's got a higher low structure with a higher low swing potential. If it can turn around from here, but on the daily, as long as it's above 32.71, it's looking okay. Can swing this low. Starts to get below there on a close. Then you're looking into, $30 and a half. You're basically looking 30 to 31 bucks. And then below there, you got to pay attention to that low. Starts breaching below 29, you got to pay attention to mid to low 28s, or it's going to be a bad time to the downside if you're long. To the upside, if it can regain the basis now at 34.17 and start working its way back towards 36.70, 37 on the upper first, then I would be looking for its local high that it just put in around that 38 to 40 bucks or so. Back above 40, you're looking 42 to I think we talked about this, 42 to like 45 at the highs. STX stacks, I think didn't stacks pull back pretty aggressively? Am I thinking of a different point? Which one do I want for stacks? Don't want market cap. I thought that they had a trading view aggregate listing for stacks, not just market cap stuff. Baba, are you trading Filecoin? That thing is dead. I mean, it's probably got, good amount of liquidity for people trying to exit or just trade it in general, but it's, as far as I know, that thing's never coming back from what I can see. It might limp along forever in an ever downwards facing spiral to zero. Yeah, Filecoin's still up. Let's just go ahead and grab the Binance chart for stacks. Looking a little tired above the upper first here. It had the potential for the 1272. It's still available to it as long as it's trading above the basis on the daily, which is where its high was at 206. So, it can come all the way back to the basis, test this high over here, and it looks fine. As long as it's trading closing candles above the upper first, which, it's looking like maybe the end of today, if this throws a bear candle, it's probably going to open under the upper first. giving it kind of the zone down to that 206 region, $2 even or so. Above $2, it's looking fine to continue to try and bounce back into range. If it does lose the lows here at 242, then I would be looking somewhere in the 225 to $2 range by the daily basis. That's only really if it loses the low and the upper first standard deviation. So two criteria there. We need to lose the upper first here at 253, drop the low here at 242 on a significant time frame below the daily, like a 4 or 6 hour, maybe even a 12 hour. Then I'd be looking 225 to $2 initially. And then below there, that would be a reclaim of this area. Then we're looking right back to 170 to 175, possibly even moves to 160. But as long as it's in the strong half of the bands above the basis and the $2 to $2.06 region, it has the potential to go hit 322. Especially if it trades back above its local high, at least locally it could hit $3 easy, and then we're looking somewhere around 310, 320 initially, 325 maybe, up to around 350 at the upper third. Now the daily is going to be turned against it. There's no in-trend bearish divergence though, so I'm not looking at this as being stupidly bearish or anything like that. You can see that the scale midline's at 204 here, and that's all the way down here for RSI, so it would have to drop like a rock. Bullish control zone's 236. I mentioned that the low here is at 242, so if it does start to lose the bullish control zone of RSI, likely going to see it head towards that scale midline somewhere around that previous high for the fib pole that I have on here, and that is going to be somewhere around 2 to 206, and that's the area it needs to hold, or else it's probably destined for 160 to 180 region. Likely we can see that the bearish control zone is all the way down here at 150. I doubt that it gets anywhere near there before throwing actual bearish divergence. And again, this is in the context of this being in very strong position on the daily above the upper first and basis. So it's still strong above the basis. It needs a little bit of cool down. Looks good. I don't see any in-trend bearish divergence. Is there historical bearish divergence? No, it avoided it. Looks very strong. Weekly is probably getting a little, it's a little aggressive. But it looks freaking beautiful. Yeah. So this is where we're getting some more confluence here for some of those other targets that I was talking about. So the that breakout that occurred, this is a beautiful uptrend, by the way. As long as it's trading anywhere above this basis at 120, is that 124.6? So basically 125, this last wick low, which to be fair is coming in even below there. Above $1.25, this thing is good. Above $2, it's even better. Probably destined for between, as this moves up in terms of volatility. If it can maintain around 250, especially by the weekly close to the upper first, yeah, even a drawdown back to the 180 region is amazing opportunity at this point. Not financial advice, of course, but this structure is beautiful. A sight to behold. Looks good. But like I said, above $2, up and to the right. Yeah, and even weekly Stochas pointed up, pivoted at 210, so a little bit higher there. If you want to have invalidation criteria for continuation from the weekly time frame. This can test in and around that $2 region, but if it closes below 209, it would cross momentum back to the downside. But as it stands right now, it looks beautiful. All right, let me look at, I guess I'll look at Filecoin. Not dead. What's not dead? Filecoin? Filecoin's like a dead project, I thought. I guess we'll go look here. What we got? KuCoin. Who's got longer? I mean, maybe it's turning around. It could be turning around. Maybe it's going to revive itself. Not before a little bit of a pullback, though, here. As long as it's above 575 is looking fine. Lose 575. Probably looking for a drawdown right back to 550. And if it drops 522, 520, then we're looking for it to come right back to the low side of the range at 491, 493. You don't want to see it lose that area, especially anywhere in the low fours where this swing is coming in at 464, so mid fours. Very strong above 650 on closes. Between 575 and 650, it's looking fine. You, from a horizontal support and resistance standpoint, you want to see it holding that upper first at 650 for now. If it does get carried down further, you do want to pay attention to about 550 to 575. If it loses that, it's right back to its local lows. Yeah, and 757 is the local pivot for the daily, or the Stoke pivot for the daily. It's strong above 650, like I said. So it does need to regain at minimum 731 at the upper second to continue to try and test that high around $8. It's got significant overhead resistance here that it did not pass on a close at around 808. So it needs to get past that to get continuation. Otherwise, this is a natural pullback. No in-trend bearish divergence just yet. Historical bearish drive avoided as well. Maybe an equal high in RSI. What does this read? Doesn't really matter because this is its own trend, and I'd want to see bearish divergence develop within this trend. So 82.83, 82.73. Yeah, it avoided it anyway, so looks fine. What's the weekly looking like? Weekly looks good for a potential cross back to the upside if it can close above 612. Holds the basis. This could be the turnaround, guys. $88 incoming. You're gonna get $250 incoming. Maybe this is the nice reaccumulation. They get some money injection, into this thing and start getting it rolling again. It's coming back to life in terms of price, Bubba. In terms of project, this thing was dead in the water. Developers left and everything. It was dead. So maybe a skeleton crew is holding on, or this thing is, destined to go to $250 again. Who knows? Maybe it'll be the $1,000 coin that everybody said it was going to be, right? That was what it was pitched as. That's why I bought it at $250. I'm just kidding. I did not buy this at $250. Not even close. In fact, I swept the floor like around, I don't remember. What did this get to? Like $2? Yeah, it was like $2 or $3. I picked some up. It was a while ago at this point. A long while ago at this point. I mean, we're looking, I don't remember. This is somewhere in here. In this time range, in this time frame between 22 and 23. It was mainly as just hey, this thing's cheap. Let's see. Let's throw, a little bit of money at this thing and see, it's money I'm willing to lose. I don't care. Let's gamble on crap coins. So historical projects, right? And then also a lot of new projects as well. Yeah, Roka brings it, doesn't even need devs. It just needs narratives. It honestly just needs to be listed and tradable. And somebody's going to be like, yeah, I want to push this up so I can get some good trading in. Like, as long as there's liquidity there, it doesn't even have to do anything. There can be zero utility. There's plenty of projects that are zero utility that trade to the moon and back through the pits of hell. And this is, to be quite honest, on the weekly, it's got potential to turn around. And those diamond hand Filecoin holders are going to make it all back. nobody truly believes in shitcoins. Look, there is utility tokens if they are hooked into software that has utility, then there is value there. It's a value add, though. It's for it to be speculative, for coins to go up forever, it's just silly. Things will moon, they will die off. It's the same every cycle. Altcoins will remain in the cycle. Bitcoin is going to be in an ever expanding upward trajectory, whereas there's probably going to be a lot of coins that chase and follow. There's probably going to be a lot of ordinals and different coins on Bitcoin's blockchain that are going to be launched that will also follow. But there is no other crypto asset that is going to do what Bitcoin is doing. I know everybody wants ETH to do it. It's going to outrun Bitcoin. No. Maybe for a little while during certain periods of certain market cycles. Maybe it has the big ups and it makes way more in this cycle than Bitcoin does. And it's going to continue for years. And then eventually it won't. It won't. Bitcoin's the long play, man. You got Wall Street here ready to take all your coins, baby. You think that they're taking all the coins? You think that they're out there pitching? You think that the former president of the New York Stock Exchange is out there talking about how Bitcoin is the best asset that the world has ever seen and ever come up with, and everyone wants it? You think he's out there because they think that Ethereum is going to outrun Bitcoin and outbull Bitcoin over the long haul? Look, these guys are not playing day-to-day, week-to-week trades. These are year-to-year, 10-year to 10-year trades. These guys are looking long term. They're making plans for very far down the line. So, Pepe can run 10,000 and 20,000%. But when it nukes, Bitcoin's still going to be here. When all the shit coins and all the AI coins are all integrated into, easily mineable hardware, where it's literally just mining cryptocurrency using passive power, pulling 5 watts off your graphics card with, the AI cores along with your CPU. AI engine cores, which are being built into all the processors, take the load off of things. That's all going to be mined just through software that you are going to have installed on your system that's passive use. And they're going to, what the use case is going to be is like you're mining a certain amount of coins by having this software run on there. That'll offset the subscription fee every month. Look, you got to understand where this stuff is going to really go and understand that 99% of the coins are going to be worthless while Bitcoin stands on top of their graves. And that's something that you need to understand as someone. Even I own tons and tons of altcoins, but where you have to separate things out is are they going to be used as a monetary as some sort of monetary store of value or monetary exchange of value? And if that value can be easily diluted because it is going to be just a software side perk versus something that is going to be ready to, oh God, XRP. Look, to be fair, XRP is probably going to take off. It's probably getting ready for a moonshot pretty soon. But look, the XRP to $2,000 gang is absolutely 100% delusional. But this long form consolidation, Landy, it's going to go to the moon. It's going to moon so hard. It's going to become the banker's coin because we're resisting the machine. So we're going to buy XRP. Wait, that doesn't make any sense. I'm a libertarian. I want to own my guns and I want my own money. But I'm going to buy the banker's coin. Woo! Nasara Jasara, baby. It's going to be integrated into everything. And Bitcoin's going to die because it's the CIA Five Eyes coin, man. Give me a break. Fucking idiots. All right, so I'm sorry if you're one of those people that believe that XRP is going to be this global currency settlement system. Look, it's going to have a function. It's going to be built into things. It's going to be just like, I don't know, let's say, let's look down the list here and find something that it might link to. Oh, wait, that's right. Link is used by everything. Everybody uses Link in some manner, or a version or an also ran of Link. Oh, but the banker's coin, I'm a rebel. I'm for freedom money. But then you're going to buy the banker's coin? Well, yeah, but that's because everything's going to be redistributed and pegged into rainbow currency. And no, it's not. Not in the manner that you think it is. Even if everything blows up and they were to privatize everything and say, okay, the public is going to own this through the treasury. We're going to take control of all of the asset-based items like ETFs and gold and silver and copper and platinum and palladium and uranium. And we're going to back our monetary system with it. Why would you use XRP for it? And where's the value going to come from XRP itself at that point? Because it's going to have to be used. And its expansion, its supply is so large and so expansive because of the consensus model that it's going to be running. But it's decentralized consensus, man. It's not like Bitcoin where anybody could just 51% it at any time. Give me a fucking break. These people are crazy. And I own XRP. I own a ton of XRP. But the idea that it's going to go to $2,000 because of all of these things also implies that settlement system that the banking system is using is completely falling apart. Because you've got this very prevalent shitcoin that then has a ton of supply, which is being unlocked and holding price down for the big consolidation, guys. Well, look, it's going to go up. It's probably going to beat out its all-time highs. It's a big monthly consolidation. This thing's probably going to go to $50, $100 over time. But that is provided that it actually even gets wide use, and because it's being used in that settlement manner, where's the value being extracted from and to? You think that the bankers and the banks of the world want this thing to be $2,000 a coin for utilization and settlement? Does that make sense? This thing could potentially run. I mean, the actual structure here is very good. $2,000 good? No. A couple, get up to like $50, $100 over the very long haul if things are done right and it gets the wide adoption and all the court stuff is behind us and everybody's getting XRP, man. XRP's the thing. We got an XRP ETF and everybody's buying that and the banks are all into XRP. The Fed said Fedcoin is now XRP. Yeah, no, I'm sorry. Yeah, look, it's going to go up. Is it going to beat out its $1.50, $1.25 highs? Sure. If it actually goes up and beats those highs, it's got a ways to run. $5, $10, $15 isn't that bad. Over the long haul, maybe it gets up to $50 to $100 over time. Maybe Filecoin goes back to 350. Maybe. All right, so let's see. Bobby says, LOL, WTF. Baba says, I think XRP has one more shot, basically, and then instead like Filecoin, maybe. Look, when the new hotness continues to come out, XRP, the arguments over XRP's the first, it's better than Bitcoin, and like all this other garbage because of the creators, and it's like yeah, and Craig Wright is Satoshi. No one cares. One, he's not. Two, no one really cares because it's not about who did what when. It was a giant effort to really push the technology forward across, different iterations of technology in terms of cryptography and distribution, and that led to what eventually became Bitcoin. And Bitcoin, having been built in the way that it is built, it was built with a specific purpose in mind, and it was not a purpose of joining the banks. It was a purpose of running against them side by side, sucking liquidity out little at a time, and then infiltrating the entire system. And what we are seeing right now is the infiltration of the entire system. And then you got the conspiracy of, well, Bitcoin was actually created by the NSA and the intelligence agencies, and it was created so that it could become the ultimate CBDC and control all of the people. Well, yeah, there is that dystopian mindset. But how are they going to gain control of all the nodes as the network continues to distribute itself? As the halvings hit and your mining power or your mining reward goes down and difficulty rises, and it's only natural that the network is going to get more decentralized because you will have to keep having nodes join the network and miners joining the network. And we've got a big push from the sailors of the world, and now there's vested interests all over the place. If you think for 1 second that these guys that have all the assets under management that they have right now for the Bitcoin ETFs aren't sitting there thinking about, like, well, we should probably fund some development on this stuff. Well, that's what they are doing. They're already doing it. And Saylor is going to be the initial vector. Why? Why did he change his company into being a Bitcoin development company? Well, because he knows that these big companies with all this AUM are going to look for something turnkey to invest in. So it's literally recursive. It's brilliant. And what you're going to see is a lot of new technologies on top of Bitcoin. You're going to see a lot of new stuff coming on top of Bitcoin. That sounded bad. You're going to see a lot of new stuff being built on top of Bitcoin. Now, what does that mean in terms of implications for the network? Layer 2s, that like your liquid Bitcoin, which is smart contract and options contract ready. What kind of competitors are going to arise in that space? What kind of decentralization options are going to be available soon with funded liquidity? What kind of contracts directly on-chain are going to be built with, stuff like BitVM. People can take these ideas, they're open source ideas, and they can develop them now and incubate them. And that's what's going to happen. And this is not a question of if, it's a question of when. And Bitcoin literally is the vortex that is gonna suck in all of the liquidity of the financial system eventually, until it's just one with it. Meaning that it's currently Bitcoin is a parasite of the traditional financial system, and it will become it's a parasite, but it's also the apex predator, and it's going to continue to infiltrate the system in every single way you can possibly think of. And I don't see XRP doing that. I don't see XRP going and becoming the base layer of energy output of the society. It can be the base layer of the monetary output of a society, but the monetary output of society is constantly being diluted. So you want something that's being diluted, or you want something that can create and hold its value as your base layer. You're not going to have a base layer of XRP. That's silly. That's just for convenient cross-border payments. And the value of the token itself at that point is all about its technology and its use. And banks don't want to pay tons of fees just to save on one side to pay on the other. That just seems silly. Yeah, but you own it, and it's got they only mined half of the supply. Okay. Look, it's gonna go up. It's gonna go down. It's gonna go sideways, and then it's gonna fuck every single holder on the planet. Sorry. And I hold a lot of XRP. I mean, a lot. I have killed the chat. I don't know where the hell I ended up on the chat here. Yeah. Oh, okay. I see. Already getting to $5 on XP would be a ridiculous market cap. Yes, it would, and it's not going to happen. The amount of money in the market cap, like think about like $2,000 is the often quoted from the XRP army. Think about the freaking market cap would need to be the entirety of the global centralized financial system. It would need to be the base layer of the centralized financial system, which is what they're, I guess, counting on. But these are also the same people that are like, you know, store your own food and prep for the government to come take everything up. But yet, like, I'm going to be part of this big centralized system. Woo! Like, I just don't understand it. It makes no sense. It goes against the values that they preach, which makes it seem like they're just scamming. Like for clicks or likes or whatever it might be. It just doesn't seem realistic. It doesn't even fit with traditional technical analysis in any stretch of the imagination. Anyway, and most of them will be like, well, it's just looking at lines on a screen. You're silly. That doesn't mean anything. I'm just going to bet on hopes and dreams. Like, oh, okay. Yeah, it's astrology for men. Like, you're literally saying that the full moon and bare moon XRP is going to go up or down. Yeah, so it's silly. Probably lost a few subs here. I saw some people bump out as soon as I said that XRP is not going to go to $2,000. So I saw a dramatic drop in viewers. I pissed off the XRP army. They're going to dox me now. They should try. It'd be funny if when they find out who I am. Anyway, let's see. The all-time high since over 2,000 days. Everything else literally mooned. Imagine BlackRock buying Nat Cats. I doubt they're going to be into the Nat Cats, buddy, but they might be into the next thing that these guys are building. Maybe Sailor will take notice. Might be cheaper to buy Bitcoin on chain than in the ETF. Look, it's broken out. You're paying what, like, you're getting the equivalent of $20-$30 in your iBit account here, which gapped down but is bouncing. Let's see what the hourly's looking like. Yeah, it's still a downtrend. This could bounce to 29.11 from the hourly perspective, but it's heading into its last hour, so it's got to get above 29.11, and we could see a stoke turn. And it's definitely got to take out 29.35, and then we probably see this bounce coming in tomorrow. Get a little bit of a reversal. Bobby's unsubscribed. Yeah. You'd buy the ETF. Look, I mean, if you want to make fiat, you buy the ETF. You make fiat. You know, I would wait for options to open on the ETFs, and then you can trade for more fiat, so you can buy more Bitcoin. That's my suggestion. Not financial advice, it's purely a suggestion. That's what I would do. Consultant narrative. That's what I would do. Don says, guys shocked about landing. I hold a lot of XP. I do. I sold a lot too. Like I sold a massive amount of XRP after the last. I accumulated at the lows and 18. Now, to be fair, like it did fairly well. It was outperforming at the time. It's also typically an early mover because those guys really spin themselves up. The good old XRP army there. If I remember correctly, I gotta go back and actually look at the chart. Yeah, so I did get back into this. Yeah, I got back into this like between 10 and 15 cents here on the weekly. This was in March and April, and then I rode this up to the highs, which its highs were a lower high than this guy over here. So it's a big consolidation, and that was to be expected. And then prior to that, way back in 16, I got like an absolute shit ton of XRP for a fraction of a penny. So like the trade, I've made my money on XRP. If this is a giant consolidation accumulation that eventually goes up, great. I'm just gonna sell it. I'm not gonna hold it and be like, oh, I love centralized banking. Just hodl my XRP and run to the nearest banker and give him a giant hug. Like, hey buddy, I love you. You're doing a great job. Like, no. Sorry. I have standards. Jimmy, I don't have that muted, so I can hear you guys laughing your asses off up there. So, Jimmy used to be at a big bank. Yeah. So, yeah. No, Jimmy. I'm not gonna out you, buddy. You're safe. You're safe now, my friend. Working at a prop shop. You're safe. Don't sell it before we do. No, I'm going to tell you that it's going way up, and then I'm going to be like, oh, guys. So if, let's play a fun game of calculate how much liquidity you have. Everybody in chat, take the amount of coins and multiply it by the price, and let me know what your number is. This is a fun game, isn't it? You just hear me grumbling, ah, shit, it's not enough. We need to grow the community. All right, guys, let's do the fun thing in the Discord. Everybody post how much XRP you hold. What bag size do you have? Oh, wow, it's going to go up to this area. Keep buying. Don't worry. Oh, it's going down a bit, but it'll bounce back. Don't worry. Stop selling. Bounces again. Keep buying, guys. And then just offload. Shotgun to the downside as it rips through the order books. No. I could never be that kind of person. Like there's so many freaking... I love what Zach XBT does. Because he keeps receipts. And he just starts ripping them out there. Like, as soon as somebody so much has moved online in that direction of ripping off their fan bases or their followers and stuff like that. And unfortunately, that's going to just hit a fever pitch again soon. It's already at a fever pitch, but it's going to continue with all these different page shills that are out there that technically they're violating the law, and could be charged, but who's going to charge them? I mean, unless they own real estate in New York, they ain't getting charged unless they have a certain name. You know, they can own real estate in New York and do all this stuff, and they'll never see they'll never see a lawsuit. So yeah, well, I mean, the funny thing is like, there's guys who have scammed so much damn money and they're still revered in the community, even within the Bitcoin community, and they scam the shit out of everybody in one way or another, whether it was through Bitcoin or derivatives of it, or yeah. And it's amazing to me, like, all it takes is like a bull cycle, and then everybody magically forgets everything wrong that they've ever done. Yeah, because they just throw their hands up like, oh, well, there's nothing I could do. The price goes up and it goes down. Whoops, I tweeted about this and then it all got sold into. Weird. Sorry, that's just markets. And look, the reason why you see a lot of this stuff doesn't get followed up on from the legal aspect, unless there is, you know, somebody that's willing to bring a lawsuit, and or there is, you know, enough there for law enforcement to go after some of these people. What you got to understand is, traditional markets are even worse. Man, that's the big lie. They're just all allowed to do it because they got fancy licenses. And even then, they can stretch those rules as far as they want, when they have influence, if they're a big enough company. You know, they'll just throw one or two guys under the bus and call it a day. So, I hate the way that song ends and has a hard cut. But the Stranger Things remix is pretty cool. Anyway, that's going to do it for me today. I've done enough yapping. It's been a little over 2 hours here. Well, I do appreciate everybody hanging out with me today. Keep an eye on some of the areas that we talked about earlier in the stream in terms of support and resistance and band levels. Looks like we might be getting that turn in Stoke. Yeah, nice bullish reset in Stoke there. In terms of a higher low bullish divergence here on momentum, we need to see that follow through with this actually taking out about 51.5 to go test around 51.8, which is the top side weekly over here. So if it can do that and get above the upper first, it's going to preserve the opportunity to hit the highs 53 to 55 or so, maybe more over time. But if it does drop this area, just pay attention. Order block zone around 50k below there, essentially looking like 49.5 to 49k at the wick high to 48,240 by the basis below there, monthly at 47, and that's going to be one of the primary areas to pay attention to. So yeah, that is going to do it for me today. You all have a wonderful morning, afternoon, and evening, no matter where you are in the world. Please trade safe, and of course, as always, stay safe. I will leave the stream up for those of you that want to revisit some of what we talked about and add it to your charts. I know that a few of you do hang out and just listen to some beats, so you're more than welcome to do that as well. So I'm going to end this in, I'm going to call this 12. That's noon my time, so I'm going to go eat some lunch. It's a little, almost 1. Now we'll call this, we'll end it at 12:55, 5 minutes before 1. And yeah. All right, guys and gals, take care of yourselves. Trade well. And yeah, if you have any questions, go ahead and hit me up at Cryptolandia on Twitter. I think that's my name. I don't remember. Yes, at Cryptolandia on Twitter. More than welcome to hit me up over there if you have any questions. I would advise you to do it publicly. I do not look at any of the messages. I have all of the messages turned off because I just get spammed like crazy from scammers and e-girls, and yeah, so I do apologize if you are messaging me there and I haven't answered. I'm sorry. Go ahead and hit me up publicly and I can answer you there. Yeah, you have a great one. Watch some of the things that we talked about. 2-day, 4-day closing at the end of today's daily. So that is something to watch. And yeah, I'll see you in recorded format in tomorrow's Staring at Charts video, and then again for a live stream on Friday. So with that being said, Landy out.